Today is Sunday, and tomorrow the markets are open. Tomorrow we're going to start understanding a little bit more about the fallout of Silicon Valley Bank and the spread of this contagion. Right now you have something called a bank run. The bank run overwhelmed Silicon Valley Bank. From Wednesday till Friday, the bank collapsed. Let that sink in. In a matter of 48 hours, a bank that's been in business for 40 years, a bank that had nearly $200 billion of assets, collapsed, totally collapsed. As a matter of fact, the CEO of Silicon Valley Bank is no longer the CEO of Silicon Valley Bank. The FDIC took over Silicon Valley Bank. FDIC stands for Federal Deposit Insurance Company, and they have something called insured deposits. Those insured deposits is up to an amount of $250,000, although there is ways to play with it. Let's just use the number $250K. The problem is 97% of Silicon Valley Bank deposits are above the $250,000 threshold, which means they're only insured up to $250,000. To make matters worse, of the 2,500 or so venture capitalist tech companies throughout the United States, think about your Teladocs and your Rokus and your Airbnbs and your Ubers and all of these other amazing companies that we know day in and day out of our every single day normal lives are actually banking with Silicon Valley. 50% plus or minus of these 2,500 companies. It's absolutely insane, right? If you are unfamiliar with Silicon Valley Bank, they are a bank that dealt with a specific niche. They banked tech startups. They banked companies that are not profitable. Why is this important? If you are a company and you are getting venture capitalist funding, seed round A, B, C, D, so on and so forth, you are building a business for what can be, not what is now. You are considered a high-risk customer, and a high-risk customer gets no priority. A high-risk customer gets no credit. A high-risk customer is exactly that, high risk. Well, Silicon Valley Bank said, hey, we're going to double down, and we're going to grow around this niche. And they absolutely ballooned in 2021, nearly doubling their deposits. And up from then until now, it is an entire different world. What happened on Wednesday until Friday is there was something called a bank run, where a customer is trying to get their money from the bank. Now, you think that your money is safe in the bank, but let me tell you something. Your money is only fractionally kept at the bank. Around 12% plus or minus, depending on the size of your bank, your region, so on and so forth. Which means for every $1 million that you have in the bank only has to keep around $120,000 on account. The rest of the money is used for business. Well, what do they do with the rest of the money? Usually, they invest it. How do they invest it? They usually buy bonds. When the government takes things on their balance sheets and they put money in the economy, that's how they do it. This is the money printer. They buy bonds. The government pays them an interest rates. Their interest rate at the time right now is around 1.9%. But the actual interest rates that are being given for treasury bonds is 5+% right now. Go check it out. The 2-year yield, the 6-month yield, 10-year yield, all of them. As companies needed liquidity, they were coming to Silicon Valley Bank and saying, hey, we need our money, we need our money, we need our money. Silicon Valley Bank does not have enough money to accommodate everybody. And over $40 billion, $40 billion plus dollars was taken in a matter of 48 hours. This caused a massive bank run. Not to mention they were downgraded by many analysts as nearly junk. And now you have this snowball effect. This is nearly as big as 2008. People are making light of the situation, but this is nearly the caliber of 2008. If you put this and 2008 together, This is like 80% or so value of 2008, Lehman Brothers. It's absolutely insane, and people are still making very light about what's happening. This is by far the second largest collapse in US history, 2008 being the first one. Now, what happens next? FDIC took over the bank. FDIC now made an auction. There's an auction. The auction bids had to come in today by 2 o'clock. We don't know who the bids are from. We don't know if there are any bids, and any bids are going to go through. Most likely, 3 bidders are the 3 big banks in the United States. That would be JP Morgan, Citibank, and Bank of America. Now, there might be some other banks, but those are the 3 banks that can actually swallow up Silicon Valley Bank. Silicon Valley Bank was a large bank. I believe it was a top 20 bank. It's not a small bank. This is a huge ordeal. We won't know anything until tomorrow. And people are kind of making their bets of what will happen tomorrow. Some people are shorting the market. Some people are longing the market. If nobody buys them in auction, the FDIC can offer up the assets. They can sell their assets. When you sell the assets are being sold on pennies on the dollar. Even if somebody buys Silicon Valley Bank, it's also bought on pennies on the dollar. How much pennies on the dollar? This nobody really knows. Uninsured depositors, 250 and up, are not guaranteed to get all your money. You probably will get some money depending on how this ends up. Janet Yellen was actually on TV and says, hey, this sucks, but the government is not going to bail out Silicon Valley Bank. And then you have people like Bill Ackman and other heavy hitters that are saying you must bail out Silicon Valley Bank. There's essentially big 4 banks in the United States that are considered too big to fail that they would always bail out. Citibank, JP Morgan, Bank of America, and one other one I don't remember off the top of my head. These banks, if something happens, will always get a bailout from the government. But smaller banks in this larger market, but not like the big ones, you're kind of on your own. When the FDIC took over the bank, they wrote a letter to all employees. They said, hey, we need you to work for 45 days. After 45 days, you will be terminated. We will be paying you time and a half for working, and if you work overtime, you would be getting twice your normal pay. On Friday, all non-cross-border, which means all workers working within the United States borders, ended up getting their bonuses. These are bonuses from 2022. Interestingly enough, the CEO of Silicon Valley Bank profited $2.2 million in stock option sales. This happened weeks before the collapse of Silicon Valley Bank. Coincidence? I don't know. You tell me. Now, some of these sales were definitely time sales, like options packages, but seems like a very big coincidence to me. I don't know. We'll see what ends up happening. Monday, the market is going to open. There is a lot of fear that other banks are going to become insolvent and there's going to be a run on the banks. One of those banks happens to be First Republic Bank. First Republic Bank put out a statement earlier on Twitter and sending letters to a lot of people that hold money in First Republic Bank. And they said, hey, our financials are super strong. You have nothing to worry about. Don't worry. You're all good. Well, is this the case or is this not the case? Nobody really knows. On Monday, I will be buying a short position on First Republic Bank. I hope that they don't go under, and I don't think that they're going to go under. But to be honest, I don't really know what's going to happen. I don't know what happens with the contagion, but I do believe that the price of First Republic Bank is going to go down with other regional banks. Right now, if markets are good, markets are down, there's always an opportunity to make money. I'm probably going to make a short on First Republic Bank. The short that I'm going to play is probably going to be somewhere in the lines of a week to a month. Not sure exactly how I'm going to play it or what I'm going to do, but I'm definitely going to keep you guys apprised of the situation. The truth of the matter is we honestly don't know how this is going to fall. We don't know to what capacity the government is going to help. We don't know to what capacity this contagion is going to grow. We don't know to what capacity the books are positive or negative for other such banks. This can be specifically for Silicon Valley Bank because Silicon Valley Bank, as I said, was a niche product dealing in a very, very lucrative but highly volatile sector, the tech sector. The same way we are, myself, most of the people watching my channel, we invest in the tech sector. If on Monday, or maybe a little bit later tonight, the government's going to say something that's going to, assure the market, then maybe it's not going to collapse. Who knows what's going to end up happening? I can't make this up. As I was editing this video, this part I'm adding right now, the Federal Reserve, Janet Yellen, the government comes out with this statement that on Monday morning, when the banks open, all depositors will have access to their money. This is not my words. This is the words of the federal freaking government. And not only are they covering Silicon Valley Bank, we just found out that Signature Bank, which was one of those regional banks that I was talking about, actually shut down today by the state authority. And Signature Bank will also have deposits ready for their customers, as per the government. I'm going to read you this news that just came out. It literally came out 15 minutes ago as I was doing my edit. March 12, 2023, joint statement by Treasury, Federal Reserve, and FDIC. Department of Treasury, Board of Governors of the Federal Reserve System, Federal Deposit Insurance Corporation, press release 615. Washington, D.C., the following statement has been released. Today, we are taking decisive actions to protect the U.S. economy by strengthening public confidence in our banking system. This step will ensure that the U.S. banking system continues to perform its vital roles of protecting deposits and providing access to credit to households and businesses in the manner that promotes strong and sustainable economic growth. After receiving a recommendation from the boards of the FDIC and the Federal Reserves and consulting with the President, Secretary Yellen approved actions, enabling the FDIC to complete its resolution of Silicon Valley Bank, Santa Clara, California, in a manner that fully protects all depositors. Depositors will have access to all of their money starting Monday, March 13th. No losses associated with the resolution of Silicon Valley Bank will be borne by taxpayers. That is bullshit, guys. This is 100% bullshit. The money has to come from somewhere. Listen to me. It is bullshit. The money has to come from somewhere. Inflation is going to go through the roof. We thought inflation was going to go up. Inflation is going to go freaking through the roof. The money has to come from somewhere. And this is going to make sure we have no accountability for these banks, which means banks literally are too big to fail. All banks are too big to fail. And now we know the United States government will be here to bail us out. The same way they bailed us out in 2008, the same way they bailed us out during COVID, and the same way that they're bailing it out today, and the same way that they're bailing us out today. Janet Yellen literally was on a few hours ago saying we will not bail out. Now it is a bailout. I'm not saying it's the right or wrong decision. That's not what I'm saying. I'm just saying there's only so much you can do and kick the can down the road until everything blows up. Our economy is gonna blow up eventually. Not maybe a day, maybe a year, maybe 10 years, but eventually this shit blows up because we could only print so much money. And we are already at the brim of what we can do. We're also announcing a similar systemic risk exception for Signature Bank, New York, which was closed today by its state chartering authority. All depositors of this institution will be made whole. As with resolution of Silicon Valley Bank, no losses will be borne by taxpayers. Shareholders and certain unsecured debt holders will not be protected. Senior management has also been removed. Any losses to the Deposit Insurance Fund to support uninsured depositors will be recovered by a special assessment on banks, as required by law. Let's read that again. Any losses to the Deposit Insurance Fund, which is the FDIC, to support uninsured depositors will be recovered by a special assessment on banks, which means that the banks will have to pay for this. They're going to tax the banks, which I guess go down to the customers. I'm not sure. I got to analyze that. Finally, the Federal Reserve Board on Sunday announced it will make available additional funding to eligible depository institutions to help assure banks have the ability to meet the needs of all depositors. The U.S. banking system remains resilient and on solid foundation, in large part due to the reforms that were made after the financial crisis that ensured better safeguards for the banking industry. Those reforms, combined with today's actions, demonstrate our commitment to take the necessary steps to ensure that depositors' savings remain. This is a very, very interesting situation that we have right in front of us. In theory, this should be good for crypto. In reality, crypto is acting like a NASDAQ tech sector stock. In the short term, this is going to protect our economy. However, in the short, medium term, this is going to increase our inflation because we have to get more money into the economy. We're talking about billions of dollars, tens of billions of dollars into the economy. Probably this is going to shore up USDC stablecoin for the crypto bros. I don't know what's going to happen on the meeting next week with the Federal Open Market Committee. Jerome Powell is going to meet. It's possible they're going to raise by 0 basis points. Who the heck knows what's about to happen? I want to show you guys one thing. This is the Federal Reserve Watch Tool. Currently, we have 4.5 to 4.75 inflation. Last week, this number right here, we had a 60 or 70% chance that it's going to be 50 basis points. After this collapse happened, and today, all of a sudden, it's a 66% chance that it's going to be 25 basis points. Federal Open Market Committee, the Federal Reserve is between a rock and a hard place, and their rock and a hard place just became a lot tighter. There is no way out of this. Eventually, everything is going to collapse, and we're probably going to have a depression-like era. When, how bad, this I don't know, but guys, it's literally a powder keg. The United States owes more money than we make. The United States is going to keep printing more money. This just means you're going to print more money. You got Biden who wants a multi-trillion-dollar budget increase for stupid shit. I mean, guys, at the end of the day, we're going to have to pay our bill. And when it's time to pay that bill, our credit card is going to bounce. And when our credit card is going to bounce as a country, guess what's going to happen? Down, down, baby. Make sure you hit the notification bell and make sure you become a channel member for $3. I might need it after our economy goes bust. Thank you very much, and please enjoy this video down below. I hope you guys are going to like it. It's another video jam-packed with a lot of knowledge, data, and fun times. Have a great day.